Oracle, ticker ORCL, do have their earnings after hours today. So what are the key levels we want to be paying attention to coming into this earnings, and then also looking forward into next week and so on? So right now we're sitting at $125. Now this is key because we may be very close to those 52 weeks highs. Again, 52 week highs are at $127.50. However, what you'll see is these grey dashed lines. What are these? This is considered fair value on the stock. So from how stock's trading, this is what it's justified kind of statistical mean is between the 6-month and the 1 year chart. So considering we're actually very close at this, but we're near these 52 week highs, this does just suggest in general that the stock is moving reasonably, like in a kind of a slow but controlled manner, but is overall quite bullish. So that's one thing firstly to note on Oracle. But the thing to consider is if we're coming into earnings and we're near fair value, the reactions are normally quite small. And the reason for that is, again, you're not overextended in either direction, so you don't expect a huge correction to happen. So we are at fair value, so not expecting a massive move, but we will go over the key support and resistances. And just to note, what are the options pricing in? The options are pricing in about a 7-point move either direction. So what we can do, and when we cover our support and resistances, you'll be able to see how close that is to what we're currently looking at. So again, that was 7 points they were pricing in. So that would take us to 132 to the upside. And if we're looking at the downside, that's going to take us to around 117. However, what you will see is the levels we have drawn out aren't really near those levels. And the reason for that is just because this stock, how it's been trading, the deviations are quite wide. So what it really does actually mean is we need quite a strong move on this earnings, kind of a much bigger or lower number than expected to have a reaction. Or again, we need them to, which would probably be the biggest catalyst, is if they either increase or massively reduce their earnings forecasts. Now, if we go to the downside, we're looking at 110 and 105, which again will require around a 12% move off earnings to hit these supports. But they're the two supports we're paying attention to. Then to cover the resistances, what we need is around a 11% move also to the upside, and then this would take us to the resistance of 138.50 and 139.30. Again, these are both our first deviations, and again, because we can see how this stock's been trading, it has been uptrending, but it's been doing it, you know, in a kind of a slow and controlled manner, which is going to make these levels usually a lot more strong. And again, it justifies why fair value is basically at the 52-week high. And it's just because, again, we came into an overbought area, we pulled back relatively slowly, and then we're pushing up relatively slowly. So we can kind of break into that fair value again. So basically what this means is not expecting a massive move off earnings, but if we do, the supports and the resistance are quite far off, and they're going to be 138 and 110.